Hello, welcome to Now Next Later for Monday, October 14th. Thrilled to be talking to Ryan Sandler today. Ryan, we usually go about a half an hour. It's no co-host today, just me and you chatting about the future. Sasha was unable to join us, but when we had Ethan on, the president of Truework, a couple weeks ago, he really set the bar high. He said, now, next, later is the perfect topic for Ryan. He's going to want to go right after what to expect. So hopefully, you're comfortable with high expectations.
Yeah, no, we'll see if I can meet them.
Well, thank you for joining us. I'm really excited for this conversation. One of the things we were, thinking about when we set up Now Next Later was kind of walking people through that thought process, particularly on the product side, but on the growth and development of technology in the mortgage industry. And so as a founder, you had to decide what you wanted to do, and you chose data verification, you chose Truework. So I was hoping we could kind of just kick it off and start there. So what is it, what is it about this topic? What is it about this company that made you want to solve this problem in particular?
Yeah, thanks, Jeremy. Really excited to be here and to talk through these topics. So we started TrueWork 7 years ago. It's been quite a few years in San Francisco, and previously I was a product manager at LinkedIn, the social network, and we had constantly been looking at challenges around verification. It's very clear that you can say whatever you want on your LinkedIn profile, on your Facebook profile, on these different profiles. And as I went deeper into the space of verification, learned this is actually a really hard problem. Way outside of just social networks. Every time you apply to a major life transaction, whether that's buying a house, buying a car, renting an apartment, there's a lot of information that's being checked on you.
Mhm.
And that information is not centralized. It's stored a lot of different places. The consumer is not really involved. They don't know if that information is accurate. It's a huge black box. And so when I kept digging deeper and deeper, and then with my co-founders Ethan and Victor, it just became something that we couldn't ignore. Uh, that this was such a large core problem in the economy, and many people have not even heard of it, and there are very, very backward solutions available. And so we became really passionate about creating a modern day credit bureau, more or less,
Mhm.
that can power, verification across a lot of these different attributes and ultimately give consumers more control over this information.
Yeah, right on. I mean, when I left Rocket Mortgage, so I had a role kind of in that product development process part of loan delivery. So how do we take what we're doing on the operations side and make sure we've got the highest, best data process, data verification, data integrity in the capital markets to deliver that loan to our investors, predominantly the GSEs. And so when I left Rocket, I joined a company that was looking to do digital closings, verification of all of the parties and the money and the documents for digital closing. And one of the things that struck me even then that we're still dealing with today is we're still stuck in documents. We're still stuck in PDFs. And this is a problem that comes up in almost every conversation about mortgage these days, but it overlaps nicely with what you were saying about verification because you've got data, you've got identity, and then you have this moment in time where this major life event of some sort is happening. So now, having worked on this 7 years, and I'm still struggling with it, having left Stabby, what's your take on why we're still stuck in scans and documents when all of these other processes exist, even if it's a really hard problem? We've got you working on it, others working on it. Why are we still stuck?
Yeah, it takes, you realize how surprising it is how long it takes to move over to new paradigms here and move over to, kind of full automation across different lenders. And, you have a lot of folks like Rocket that I think have automated as much as possible here. And still, to your point, there are still times where you have to use PDFs and documents. It's really frustrating. Um, and if you look at the different kind of verticals of data here, there's different reasons for it. I mean, let's look at payroll and income for one example here. One crazy stat to me has always been that over 20% of employers don't even use a modern payroll system.
Hmm.
They are, some folks are still paying people, with cash. Some people are using Excel sheets and even pen and paper to track how people are paid. And so there's some portion of the economy that it's kind of impossible to automate. You kind of have to get a PDF or a document and get on the phone with the employer directly because those people, there's no software. And when you kind of think about that lens, it starts to make a bit more sense. And how, we'll get into more of Truework's approach and some others here, but why we've kind of made this realization that like some things will still require some piece of manual work, but we're going to still automate that as much as possible. We're still going to make it as easy for the lender and not have them, having to sit and view and read those PDFs. We're still going to automate that as much as possible. But the reality is that there's still going to be PDFs in some of these cases.
Yeah, I think that's a really key piece is like a lot of our audience struggles with which steps to try to take down in which order. So there's people who are like me, optimistic and ambitious, telling lenders, you got to update, you got to change, you got to go, you're going to get left behind. But the reality is you can't do it all at once. And so the most high value is how do you do it step by step? And so I think, what you're saying, I think is really key when you do that step by step. I guess the question I have in the now bucket where we are now is you're dealing with systems of record because of the loan delivery process, because a lot of banks and every IMB sells on their loans to an investor. So can you talk a little bit about how you've thought about, what system of record means or should mean to this industry? Like I like listening to a podcast. We don't do sports analogies as much here, but I do listen to a sports and podcast where they do overrated, underrated, properly rated when talking about performance. And so when I was thinking of a system of record, the LOS or this data integrity question, what's been your interaction with that? Are we making too much out of the LOS? Are we making not enough out of it? And how do you think about Truework helping lenders go through that step-by-step process to really lock in the data for what we have to do, which is deliver?
Yeah, it's a great question. I think it's properly rated or even a bit underrated. I think having
Hmm.
system of records here are really important. And you have the LOS, of course, that is kind of the internal system of record for a
Hmm.
lender. But then you have other system records, like a Truework, like an Equifax, like these others, where
Hmm.
if you want to verify someone's income, are there systems of record for that? Verify someone's assets, systems of record for that. And so I think it's really important that you do have these systems of record. It speeds everything up. It assures more accuracy. I think how the market may think of system of record may be a little different than how we think of it, and that's where
Okay.
um, can get more into some specifics here. I think historically people have thought about, hey, on the income side, you just have a copy of an employer's payroll or a payroll company's records, and you have all this kind of instant database, and therefore you're a large system of record.
Hmm.
We think of it a little more broadly, and that a system of record should be able to verify any applicant that comes to your page,
Hmm.
and whether you have that data exactly within 1 millisecond or it takes 1 minute to get back, that system of record should be able to be comprehensive.
Hmm.
And that's where the approach that we've taken, a really comprehensive approach, that whether we have the data on our database already, whether we ask the user to log into their payroll, whether we ask them to upload a document, whether we go to the IRS, whether we go to the employer, there's all these different methods of how to verify. But ultimately, we're providing that system of record back to the lender. And that's
Hmm.
all, ultimately what matters.
Yeah, so that's one of the biggest challenges, it sounds like, with systems of record is twofold. One, they have to become so dependable that they're almost a utility in many ways. But
Mhm.
then two, that means they're so critical. I've been using this phrase a lot. I don't know if this resonates with you, but the bloodstream of the industry, meaning when I get startups coming to me saying like, how do I get into the industry? How do I break in? My thinking is always you want to be in sort of the system, the bloodstream of the system. And these big credit bureaus, these big data providers sort of are the infrastructure for so long that infrastructure starts to age it almost doesn't matter though, because it's so critical to these systems of record. So how do you, you've been working on this for a while. How do you take that on? How do you think about the role that these bureaus play? And they're profit driven, but they're also utilities. They're critical to regular everyday applicants getting a chance at credit. Like the thing we talk about all the time, how to get more people into the ownership economy. And yet there's a tension there. Can you talk about that tension? Like what's next as we think about this battle around credit bureaus, utilities, and how you've seen that evolve?
Yeah, it's a really good question. I think look like any company is going to be profit driven. That's totally fine. I think as much as you have competition, uh,
Hmm.
then you have these companies really competing for those profits, really working hard for them, really creating better solutions for consumers and lenders. What becomes challenging is if there's only one system of record,
Yeah.
that one system record can charge anything they want to access it. They don't have to innovate on product and they can still charge a high price. And what's I think helpful if you look at the traditional bureau space of just accessing credit information, credit history, you do have competition, right?
Hmm.
And that competition I think has been healthy for the market. In the income space where we play, historically there wasn't that competition. And now just in the past 5 years, I would say with Shor
Hmm.
and other players that have come along, you do have more competition, and I think that's becoming really healthy where you see that there might be two or three systems of record in income, and the customer now has choice of
Hmm.
which system of record to use. And when there's choice involved, it's going to push us to innovate faster, to come up with the best APIs, the best experiences for lenders. So that's one big takeaway I've seen from the industry is like these system of records are really, really important. But as much as there is choice on which system of record to use, the better the market will perform.
Yeah, that brings up a question that when I think about where we're headed, there's two aspects of what you said that really fascinate me, and you sparked this idea that I hadn't thought about before: transactional versus kind of ongoing.
Mm.
And when you talk about consumer choice, at least for me, a lot of what I choose outside of financial services is an ongoing relationship. And to some degree, credit cards are financial services, so I don't want to be too broad here. But like I choose my credit card, it's an ongoing data validation verification relationship. I fly a lot, so TSA, Clear, and my airline is kind of an ongoing. But then you get into lending, and it's very transactional. Have you learned anything? 'Cause it sounds like you've got some thoughts around like how these bureaus act in a transactional sense versus how we look at things like income, employment, and identity in a more ongoing way. I'm not sure if there's a question there other than you made me think of it. So I'm curious, like, if there's anything you've learned in that space.
No, yeah, I mean you hit the nail on the head on one of the biggest frustrations that like I came into the space with is like every time I apply to a new loan, every time I rent a new apartment, every time I get a new job, there is someone checking the same information over and over and over again. And of course, your point is transactional. Like I don't really have affinity to use one or the other. Lenders have affinity, so like there's just a lot of wasted effort, and that's where bringing the consumer in the loop here and what we're doing at Truework and what we're building at Truework is a way that the consumer can see the information that's being verified, see all their verified information in one place. And the long-term goal is that maybe there doesn't need to be more work to verify me every time. If I
That's
was
right.
just verified applying to one loan, then the lender should be able to verify me really quickly for the next loan. And creating more of a world where it is an ongoing relationship
Hmm.
rather than a transaction that's lost in time, I think will create a lot of efficiencies. And you can think about that both as a consumer, going back to the same lender for more and more products, as well as a consumer and lender using the same set of information for
Hmm.
more of these transactions. So it kind of works both ways. But it's a really great question, and I think it's hard. I think it takes a long time. But we really, when it comes to a consumer's view of their own data, want to move to more of an ongoing relationship.
Yeah, absolutely. Is there something that pops to mind that's an advancement in that work or in this, area that you think is one of the most exciting advancements, or what's kind of up next that's right on the horizon for us as an industry, as a provider, that you're thinking about?
Yeah, and I think that that point around kind of centralization and
Okay.
efficiency here is really where we see the industry continue to move, and where we're focused a lot about is um, if a lender can go to one place to verify any applicant, it becomes a lot less disjointed of a process if they have to go and deal with a lot of different vendors. And so moving lenders from a kind of single point solution to more platform solutions
Hmm.
when thinking about these problems of verification is really where we see this space moving towards. And how that plays in practice is before I'm a lender, I might deal with 12 different vendors to verify income for my applicants. And again, there's like this, it's very disconnected. It feels much more transactional in that way versus a lender coming to one API or one tool to
Hmm.
verify all their applicants. It streamlines a lot of this process. And that's really what you can do with Truework. And again, I think there are other players that are
Hmm.
working on similar things for other verticals, and it's the same kind of trend. Is how do you provide this platform single solution that doesn't have to create a lot of juggling of different vendors? And that's not only easy for the lender, it's easier for the consumer. They know
Hmm.
there's one place that they can go to also view that information.
That's right. That brings up two trends that I've been very persuaded by, looking at a bunch of different companies and looking at a bunch of different um, tools over the last couple of years. One of the trends is pulling what I've heard as move left, pull left. I like to call it proactive finance, but the idea that the more you can do upfront, the more you can do proactively, the more you can front load, the better decisions you can make because the data can then drive a lot of the workflow and a lot of the decision making. And so that kind of leads to the second trend, which is how can we get better at using data attributes to rearrange the workflow better? Like a lot of people would ask me what Rocket Mortgage's special sauce was or what was like going on under the hood. And I would always come back to I thought it was a workflow company, like the technology applied to the workflow. Who does the next right task at the highest, best moment? And that like firing of tasks, that firing of work to the right person at the right time is transformational in an industry that's typically linear or
Mhm.
typically passing tasks from one to the other. And so what you're saying is these two trends are are about to come to everybody, which is pull everything as far as you can up front. And then instead of waiting for a person to order a service, click this button to order the service, let the data drive the call to that one API hub or that one place, get as much as you can. Now do the next one as much as you can. And lenders can really move a lot of that work that I like to call toil, move it up. Is that accurate kind of thinking in what you're seeing with your lenders, or what are they asking you to do?
Yeah, 100%. And I think you put that exactly right. I think there's a lot of lenders that are looking to the Rockets of the world and saying like, yeah, what are they doing, and how can I improve my process to look more like them? And yeah, it's more efficient data providers, more centralization around those data providers, and more automation within the flow.
Mhm.
Orchestrating across all these different tasks, as you said, can be a really hard technical challenge, but there are vendors like Truework that can help lenders get there. And so I think you're
Mhm.
exactly right.
Excellent. So this is the point where we always try to shift. We call it now, next, later for a reason. And we always try to shift to later and give people a sense of what they need to be ready for, what they need to be thinking. Our audience likes to be ahead of the curve, listening. So one of the things we've been talking about is these trends and particularly technology. And so I just wanted to kind of throw it back to you on these larger technology trends that we're seeing. So this broad lending landscape, everybody wanted to talk about AI. Everybody wants to talk about AI, but technology adoption is much bigger. Can you just talk about where you see what's kind of later? What's about to come down the path for lenders? Where are we going to be a year from now, 2 years from now, and beyond when we think about innovative emerging tech?
Yeah, no, great question. You mentioned AI. I know it's such a hot topic, but it is something that we do think can be transformational for lenders. And excited to kind of talk more specifics there. I think if you think about what we do at TrueWork and some of the other names we've named, including Rocket, a lot of what we do is a core machine learning problem. We build this machine learning platform from early on that as we do more and more verifications, we get smarter at how to do
Mm,
verifications. Oh, we've done 5 for Uber. The 6th is going to be much faster because we've
mhm.
learned how to verify Uber. And that has proven extremely, extremely valuable over time. As we started doing millions of verifications, we just got smarter and smarter and faster where to route, who to send it to, which method to use. This is a lot of AI working in the background to learn and get smarter as we go along. So, I don't think these are brand new trends. I think there are folks that we've been, a lot of folks in the space have been implementing AI technology for a while. I think now you're seeing, especially in the last 2 years, this real leapfrog effect of how fast things are accelerating.
Mhm.
And I do think there are a lot of unknowns for lenders on like how exactly like do I implement AI? Like where do consumers think about it? Like how does it actually work for lending? So definitely a lot of unknowns, but we will continue to see transformation because of it.
Yeah, agreed. I was thinking if I was advising a lender in their kind of fourth quarter planning, a lot of them, do this kind of like 2025 planning, strategic planning or kickoff in the fourth quarter. I think one of the key questions you have to ask yourself and you have to ask your team is how much do I need to know and implement AI, adopt it, and how much can I rely on my technology partners and my business partners? Do you have that question coming in yet from lenders? And if they were to ask you in their fourth quarter planning, like what would you say for the future that a CEO at a lender should be thinking about their adoption of this technology versus relying on business partners to get better and drive costs down?
Yeah, it's a great question. I think it depends on how big of technical teams the folks have.
Hmm.
How much can they actually spend time on this directly? It's definitely can be much faster to utilize a partner.
Yep.
And so again, it depends on the lender and what advice I would give. But I would say broadly, I'd say it's a really fast way to get started. Start
Hmm.
experimenting with these concepts by bringing in a vendor that can help.
Well, Ryan, I really appreciate it. We got one more question from me. We got one more question from the audience. We're going to try to get everybody on time here. So thank you again for joining Down Next Layer. I'm really enjoying this conversation. This could go on and on. One of the questions that I had before we move to the audience questions, just to kind of get us thinking about bigger trends, waves that the mortgage industry and lenders really should be thinking about, maybe even beyond AI. What are you seeing surrounded by technology, in the Bay Area, having worked deeply in this for 7 years? Is there a wave that you'd recommend we keep an eye on or that now, next, later we should keep an eye on that's going to affect mortgage lenders going forward?
Yeah, I'd say, I hate to take it back to AI, but
Yeah, sure.
it
That's
is a massive platform shift
yeah.
we're seeing in technology, and I think a lot of investors and experts in the industry will liken it to the early internet days or the
Hmm.
mobile wave or the cloud wave, right? Each of these transitions and platform shift have created some really large companies and have changed the way existing companies play. And I think in lending, like I'm not sure it's gonna disrupt it completely. What I think is gonna happen is that lenders are just gonna get better and better at what they do. Just like mobile, it wasn't like some new players came around, but it was a lot of the existing players that moved to mobile or moved to cloud are the ones that saw a lot of advantages. And I'd say, like, some final thoughts here is like it's not only the internal tooling and implementing these technologies internal, it's keeping a real eye out for what's happening outside to a lot of say channels, marketing, sales, et cetera, et cetera. I'll give you like one example, like you know SEO and marketing.
Hmm.
You
Hmm.
have probably some SEO strategy. A lot of people are going to Google and searching the best mortgage lenders. You want to have some strategy and content around that. Well,
Yep.
now you're seeing consumer behavior change. There is a cohort of consumers who don't even go to Google anymore. They're going
That's
to
right.
ChatGPT to search.
Hmm.
So, what's your ChatGPT strategy? Are you showing up in ChatGPT? Is your marketing team thinking about this?
Hmm.
These are platform shifts happening outside that even in your marketing team, you need to be really, really aware of.
I think that's such a great point. I know YouTube is Google technically, but not to the SEO that you're kind of talking about. And I saw some really fascinating data recently that YouTube is now the largest search engine for a
Wow.
certain cohort of the industry. Like obviously if when you go big, it's still search engines to a degree. But when you go younger people, they go to YouTube first. They go to ChatGPT first, to your point. And so there's going to be challenges. I think that's an excellent point, something we all need to be thinking about. One of the things this brings up, and this is the audience question, but it also goes fundamentally to AI. Technology innovation is expensive. Computing's expensive. Like you want the best and the brightest. We want our best software engineers working on this. Our best software engineers are hard to come by. They're expensive. They're working for the big tech companies. How do you think about cost? We know that very specifically, verification costs are at the top of the mortgage lender's mind and the MBA, as in trade associations' mind, over the last few years because they continue to go up. Do you get a sense what the relationship is between innovation and paying for these awesome modernizations and ever lowering the cost to the consumer or to the market, and what that balance is? How do you handle that question?
Yeah, I would say as much as possible, trying, and it can be challenging, but trying to do
Sure.
that math, right? Of
Yep.
um, how much ROI do I expect to see on this investment? If I'm going to go, put two engineers on implementing some great new AI technologies, like I should tie that to some cost saving that I will
hmm
see, across my economics. And of course, this is really challenging. But I find it, for us internally and customers as well, like having that set goal, at least that you can tie to, can be just a very like healthy way of looking at it rather than, just spending, an unlimited amount of money on some technology they may never prove results. And so, if you hire an engineer to do specific tasks that you think can reduce your COGS by 5%, whatever it is, like, you just you make sure that you're eyeing those metrics and seeing that result. Because the great thing with AI and some of these technologies, you should see these results pretty quickly. If you take
hmm
a manual process and go use, GPT or another LLM to automate that process, like you should start to see those cost savings pretty quickly. And so I just be really make sure it's tied to those end metrics.
That's a great point. I mean, I think one of the things we've seen in prior iterations of technology adoption at lenders is I'll add the technology, but I won't necessarily fully trust it. So I'll keep my team also. And now I'm just sort of doubling the effort. I've removed the manual process, but I've kept the individual there. And I think in this industry especially, I've noticed right from the jump, there's all this concern about who's going to lose their job. And I think one of the reasons is we've gone through these big cycles of hire up to scale when the economic environment says so, and then reduce the size of the workforce when the economic cycle is such and dictates that. And that has created, rightly so, this fear. But we've also not adopted quickly in this industry. So you constantly have this tension of like, well, how do I adopt technology and actually lower my costs and actually become more efficient within this context of kind of fear? And I think we're right now there we go.
Yeah.
So I don't
Sorry.
know if you heard, no, it's okay. I don't know if you heard the end of my question there, but it was just like we're in this brackish waters of like fear and change versus
100%.
adoption. And that's going to be the fundamental question, I think, facing your customers in our audience going forward is like, how do you manage through change?
100%. And I think like my final thoughts on this is like, just how we saw with some of these other platform changes in the past, it's not necessarily probably not going to lead to workforce changes. It's more how do you make your existing workforce more productive?
That's right.
And how do you drive more efficiency through that productivity? So I think that's what we're really excited about rather than like making any workforce changes because of it.
Yeah, let's put people to work on the harder problems. There's a lot of complicated problems in this industry. Let's put people to work on those. Renovation, construction, fractional ownership. Like we have hard things people can work on. Let's get there. Well, Ryan Sandler, CEO and co-founder of Truework, thank you so much, man. This is a great forward-facing conversation. I'm going to share this widely because I think it's incredibly valuable for product managers, capital markets folks, mortgage CEOs to hear. So thanks again for being here, man. Really appreciate it.
Thanks, Jeremy. That was a lot of fun.
All right, take care.